Let's very briefly just speak about what's happening here with this divide, with these tensions. What are your takeaways from it? I mean, from what we're seeing in terms of the credit default swaps for the 5-year spread, and if you take a look at what's happening from the market, some pressure on Qatari stocks, but still nothing significant yet.
Nothing significant yet, and I think, well, on the political side, I'll let Sally roll, but on the market side, we've seen the Qatari market volatile. I think the only significant thing is basically foreigners being net sellers for the past few days, which is natural. So as you mentioned, like with this increase, the foreign investors' risk premium on the market, the answer is if it prolongs, yes. Okay. And we're just seeing some volatility there when we're seeing foreign investors being net sellers. But again, nothing significant. We're not seeing the market being crashing.
But the other big theme throughout the last few weeks has been the lack of volumes and the lack of liquidity in these markets. Ultimately, we've put this up on a chart in terms of which sectors on the Saudi Tadawul, which has been the key market of interest for a lot of foreign investors as it prepares to open up to the MSCI Emerging Market Index. Arguably, you know what, I just found out this morning when I was looking at the WEIS function in terms of the ranking of global exchanges that the Tadawul is one of the worst performing exchanges so far this year. And you can see most of these sectors here are actually trading to the downside. Some big losses for consumer services, capital goods, and the banks as well. Look at that, down 5.3% this year. There was a view from Bank of America Merrill Lynch that the market is underpricing the big opportunity that could be at play here. Is that really true, or is there a fundamental disconnect between Saudi economic reality and market reality and some of the other perceptions out there?
I think we should differentiate, because if you look at the economic reality in Saudi now, and it's all related to oil, oil is still around the $50 price. You're seeing the reserves being depleted, so obviously that's being reflected in the market. The MSCI story is a different thing, and it's something that's long-term. We're talking about an event that can be 2019 the earliest, in my view. So I would say, and that's what we're seeing on the desk, we're seeing foreigners slowly trying to chip in stocks that are expected to be heavyweights in the potential MSCI inclusion, but it's still, I'd say, we're still 2 years away from that. So seeing the market reacting aggressively or seeing liquidity improving, especially with the beginning of Ramadan, I think it's going to be difficult. So if we're asking about the market pricing in a potential MSCI inclusion, I think that's still a bit early.
Saudi Arabia is a huge market with a reputation for being a bit less agile than the rest. And now we're seeing so many reforms. How has this impacted investors?
Well, listen, we've seen it impacting investors, right? So in the beginning, and I was like on this show basically saying, I think reforms are going to be very positive long term, but we still haven't seen it filtering through the economy yet. And I think that's why investors are being cautious so far.